how many people have we sat in this room and asked, when do you want to retire and how much do you think you're going to need to spend when you retire? And for some people, they've never actually thought about that. They've actually never been asked that question.
Hello, I'm Mark Classic, Director at Accounting Professionals, and welcome to the second episode of our Beyond the Balance Sheet podcast. Today we'll be joined by our junior accountant, Zac Jenkins, along with Principal at One Wealth, Tony Bates. All right, welcome Zac to the Beyond the Balance Sheet podcast. Thanks for joining us today. So, Zac, you joined our team nearly 2 years ago, I think in January of 2024.
Yeah.
Tell us a little bit about how you came to Accounting Professionals.
Well, I ended up in Wollongong for university, just because I wasn't really sure what I wanted to do. Mm-hmm. But I did business at school in year 11 and 12, and I always thought that was pretty good fun. And then I did an accounting subject at uni in second year. It was like ACCI 122, and that was really good because that's when you learn about like the debits and credits. Long story short, Accounting Professionals came up on Seek, and I developed an interest in accounting, so I thought I'd apply. Came through, and now
Here you are.
Here I am. Yeah.
So during your time at high school, accounting wasn't ever on the radar?
Not really. I tried a bit of everything when I was in high school, like year 11 and 12. That's when we really got to start picking our electives. Mm-hmm. So I did English, which is because we have to do it because we're English school.
Yep.
And then dropped maths, dropped science, and then did construction, hospitality, business, and a religion minor, which was two lessons a week of religion, 2 lessons a week of sport. Don't know how that works, but So
you wound up being an accountant without any real, certainly without a maths background, and I think that's quite a misconception that in order to be a good accountant you need to be good at maths. And I can speak personally that I'm not the best mathematician in the office by any stretch of the imagination, but the work that you do doesn't solely rely on a maths background.
No, not at all. I think most of the work goes through Excel now, or even Xero. You can calculate the stuff in the manual journals.
So what attracted you to Wollongong?
In my mind, I could take 3 years after school to try to figure out what I wanted to do, while getting to live at the beach, meet new people, and just experience a young uni student party lifestyle. So that was pretty much it, and then business was kind of just a way to do that. I didn't really have any idea of what I did want to do.
And I think that's important. Often there's an expectation for people when they're leaving school that you've got a predefined career path in place. But I'm a sort of a big believer in following what you enjoy doing. I think you'll have far more success in a career that you enjoy rather than a career that might be either forced upon you or it's a perception that'll create opportunities for you.
No, I agree. I certainly tried a few things and I still didn't know what I wanted to do. So I thought I'd try accounting because I enjoyed it in uni and it went well. So I'm enjoying it so far. I did a stint labouring as a landscaper, did work experience as a carpenter. I tried everything. And
I guess funnily enough, having those experiences in different trades and different occupations actually does stand you in good stead for an accounting career, because you get to have an understanding of what's, if we've got a client that's got a carpentry business or that's got a hospitality business or whatever it might be, you have an understanding of what it's like to be involved in those businesses from an operational perspective.
Yeah, Cam's got a couple clients. One of them's a landscaper, and I spent a bit of time landscaping, so it's kind of cool.
So you're up with the jargon, and you know when we're talking about triggers that determine the success or the failure of the business, the gross profit on a job and things like that. You have a better understanding of what all that means by having experience actually working in the business.
Yeah, definitely.
So you found your way to Accounting Professionals, and you've been working with Cam since you arrived. What type of work do you do on a sort of day-to-day basis?
It actually changes a lot. Yeah, it started off with just researching things, doing drafting emails to clients to send to Cam.
Yep.
Just getting an understanding for it. And now it's moved on to stuff like Baz's. He's got me doing year ends at the moment. Even Nadia's got me doing tax returns too.
Yep.
So it's actually varying a lot. In my interview, I remember I asked you if you thought accounting was boring, or if you thought you found yourself doing the same tasks constantly.
Yep.
And you said it might be like the same thing, but it's always different in a way.
Mm-hmm.
And that's what I've found as well.
And what do you see yourself sort of working on, say, in the next 12 months? What sort of work do you hope to be doing in the next 12 months?
I'm happy with like what I'm doing at the moment. I know maybe some more management reports with Cam.
Yep.
But that's it. Like I like the field that I'm in. I'm happy not prioritising ITRs.
Mm-hmm.
So I think year ends and BASs and like the business side of things I think are really interesting.
Yep.
And like I think that's what I'm interested in.
So, yeah, outside of the office, you're studying at the moment.
Mm-hmm.
So you've finished, as you mentioned, you've finished your year 12 at school, you've come to Wollongong, you've enrolled in uni, and you've combined work and study together. How have you found that?
If you asked me last year, I would say not good.
Mm-hmm.
When I was doing uni.
Mm-hmm.
Like not good, but not as best as it probably could be. I
Yep.
wasn't prioritising study, and then I think last year I struggled a bit with it through uni because I just wasn't focusing on it in the first semester. And then in the second semester I realised I probably have to start picking myself up here. So that was a bit of a change. And then this year with the new CA Foundations program, it's been good.
Mm-hmm.
Like I've actually been waking up in the morning and studying.
Tell us about the new CA Foundations program.
So the CA, like the Chartered Accountants, they've introduced a new program to target school leavers or uni students, like halfway through uni, finished uni, who don't have enough credit points or whatever to do the Chartered Accountants actual program.
Yep.
So they've designed this new program, and it's got 2 levels to it. The first level is fundamentals, and that's for people who have just left school and they have no prior knowledge about it. And then there's the foundations, which is where I joined in, which is for people, I think, with 1 year of experience at the workplace and a bit of uni experience. And because I'd done a couple of accounting classes and finance and business classes at uni, I got about, I think it was I can't remember how many, maybe 4 subjects taken off. So I've only got to do 4 subjects now before I can start my actual CA. But pretty much it's just another stepping stone to become a chartered accountant. And I've found it to be more practical.
So it's more accounting focused, I guess.
Yeah, that's all it is, which is good. It's really knuckled down on the accounting part.
And what you've effectively done is you've stopped going to university now, and you're doing a different pathway to becoming a chartered accountant.
Yeah, so I deferred uni for 12 months
Mm-hmm.
because it didn't start until July. So I took the 6 months off studying completely.
Yep.
And then from July I've started studying. This new CA Foundations course has been awesome.
Yeah.
It's been good.
And how do you find the support from within the office? There are sort of a number of people that are doing at various different stages of their professional development. Do you find that there's a good culture within the business where everyone's sort of helping each other out?
Yeah, no, 100%. Like, you've got Jason and David who are finishing their CA now. I think David's almost finished. I think Jason's actually almost finished too. And then you've also got all the senior accountants who have been there, done their actual CA.
And I guess that's always been our philosophy as a firm, is to take on sort of undergraduates or school leavers, and we really find that that's beneficial to both the school leaver as well as us as a business. And we consider ourselves a training firm, and ideally what we like to see is that someone can join our firm and within a 5-year time period they will have finished either their bachelor degree at university or now the CA Foundations program, to then roll in to doing the CA program itself, all the while having exposure to the work environment and gaining that experience along the way. That after 5 years you're in a position where you can actually go out and be employable pretty much anywhere else in the world. And we've had a number of staff that have done that previously and forged very successful careers, whether it be at other public practice accounting businesses or whether it's been in the broader commerce field itself. And we're really proud of that. Yes, ideally we'd like everyone that starts with us to stay with us, but the reality is we know that's not going to happen. So, you know, we get a real kick of seeing certainly our former staff members do really well beyond that. In terms of, you know, people that might be looking at a career in accounting or doing the CA Foundations program, do you have any words of wisdom for them?
I would say just try it. If you're interested in regardless of if it's accounting or not, I think you just got to try things to figure out what you do want to do, what you don't want to do. I think that's the important part, because that's what I did during school. Yep. I tried everything I wanted to try. I enjoyed all of it, but so far I've actually genuinely really enjoyed doing accounting, which I didn't think I would say as much as, say, when I was working in carpentry, but it's been awesome.
Well, thanks for joining us today, Zac. It's been a pleasure to chat with you, and certainly everyone that's listening to this will get a little bit more of an insight as to your story and know a little bit more about you when they cross paths with you in the office. Welcome, Tony Bates, Principal at One Wealth.
Thank you, Mark.
Great to have you on the podcast. Tell us a little bit about One Wealth.
Well, One Wealth, it's beyond the balance sheet. So One Wealth goes beyond the balance sheet. Did you like what I did there?
Thank you.
We like to look at the family situation of the business owner, I suppose, and make good financial choices, set goals. So there's a lot of goal setting in what we do, but it's really about sleeping at night with the financial choices that you make. So you can get from where you are now to where you actually want to get to.
Yeah. And for those listening to the podcast, we've had a sort of a working relationship with Tony over nearly the last 10 years.
Yeah, I'm thinking of some of those early clients that were sort of, can I afford to retire? Now they're retired,
yes.
And they're enjoying the franking credits and the income landing in their bank account.
And it does. It just seems like yesterday.
It does seem like yesterday.
There were some changes that were coming about in relation to how accountants could advise clients, particularly in the self-managed super fund space. So,
yeah, crazy. Changing rules, which created an opportunity for us to work together, which has worked well,
and as a result of that, we're able to sort of expand our service offering to clients in that financial services space.
Yep.
So,
and super plays a huge role in financial planning because it's the retirement pot and it's so generous. So working together on that super piece has been good fun.
Yeah, and I guess where we start with a client is looking at a financial plan for them, and that's different to an investment strategy.
Yes, it is. Yes, it is. And we've got a good process that you and I have worked over many years where we do a kind of a health check on how they feel about their income, their debt, their insurances, their retirement planning. So we already know what their hot buttons are before they come in. And so the process is then to just gather the data that we need. And I know that sometimes you fill that in for the clients, and that's all good. So that when we actually sit down with the clients, we're already talking to them about their hot buttons, about the things that are causing them to not sleep at night. And we can really focus in on what improvements can we make in all of the areas that we deal with to help them get to where they want to be.
Yeah. And, you know, that financial plan is multifaceted, contains a number of different focuses, and probably often things not traditionally associated with financial planning.
Well, that's right. I mean, we use a discipline around 6 parts of a wheel. So there's the income and the cash flow. There's the investment piece, the savings and the investment and the wealth creation. Then there's the protecting of that through insurances and risk management generally. There's the goal setting, the retirement, and then finally there's the how do we pass it on through estate planning, or how do we plan for the succession within our own family.
Yeah. And I guess the other thing that we talk to clients when we're formulating this plan is it's a live document. It's not something we prepare and then it's set in stone.
Unfortunately, we have to start with with one document, but I call it a roadmap for that very reason. Because when you want to be somewhere other than where you are, there's lots of different choices to make along the road, and you'll come to a fork in the road in 2 years' time, and you say, actually, I want to go this way now. So it is a live document. Life throws challenges to us, and so it needs to be dynamic in that sense.
Yeah, and we'll talk a little bit more about the investment part of it going a little bit later, but what are the other parts to that, as you mentioned before, the wheel? Yeah,
I think the big one is, and I tend to leave it to the meeting, is the real goal setting. It's the, why are we here? And, you ask why and they give you a glib answer, and then you ask, but why is that important to you? So you actually do go to the heart of what a family or what a couple are thinking about for their legacy, for when they want to retire. How many people have we sat in this room and asked, when do you want to retire, and how much do you think you're going to need to spend when you retire? And for some people, they've never actually thought about that. They've actually never been asked that question. And because we've done it so many times, we can actually guide them not so much in I need $80,000 a year, but break it down to a week. The kids are off your hands. There's no mortgage anymore. You're not going to pay tax anymore because it's all going to be sitting in super. What do you actually want to spend on a weekly basis? And when you have that and put that up on a screen and model how to get to that, that's an incredibly valuable moment in that meeting. And sometimes we have clients that just say, oh, I am on the right track. I'll go home tonight and I'll sleep better.
Yeah, and that's often the case. It's that initial meeting, clients actually come in not knowing.
That's right.
And even we can provide them with a little bit of clarity that things might be okay, but things could be a lot different if we did
100%. And then part of it also is, but what if something went wrong? And that's where the risk management piece comes in. And I ask all sorts of questions. Is this your forever home? That's a really good question. Or is there things that you really don't want to do, or there are things you want to avoid? There are so many rich questions that you can ask in that meeting that actually starts to help put together what we call a financial plan, a roadmap.
Yeah. And a big part of that, as you said, is protecting it. And making sure that often clients will want to leave a legacy for their children or their broader family.
Well, the biggest risk, I think, to workers is their capacity to earn income. So most Australians are hopelessly underinsured. Most Australians who have a mortgage and have children need more than $1 million in insurance, life insurance, and they don't have it. But they also need that protection. We try and protect their sort of lifestyle by putting money for I call it the today bucket. Trying to give them enough flexibility that they'll always have cash, emergency funds if you like. But you also need protection formally through income protection insurance.
Yeah. And then similarly to that, estate planning forms a big part of the risk strategy and that intergenerational transfer of wealth.
Look, most Australians who have never seen a good accountant or a good financial planner don't have a will. That's the reality. They don't have enough insurance. And so if you think of a financial plan as the ability to go home and know that you've ticked all the boxes and that you've made good choices, there's no perfect choice, there's no right choice, but there are good choices. And estate planning is part of that because it is all about all this effort through your lifetime and making sure it goes to the people you intend it to go to.
And you've sort of touched on a couple of the aspects of the plan, but if people are starting to think about a financial plan and their financial future, what are maybe the 5 key things that they should be thinking about?
Yeah, I think, goal. It's about goals really, but certainly I think it would be value. It depends on their age, of course, but if you're in your 30s and 40s, it's all about cash flow. It's entirely about how am I going to get through this period? How am I going to pay the school fees? But as you nearer to retirement, it really is around how do you want to be spending your life. I've turned 60, as you know, and I call myself in my 3rd trimester, and I am starting to think about how do I want to live my life for the next 20 years, which includes working. My plan is to keep working, but how do I want to do it in a way that I'm not pedaling so fast?
Yeah, and often there is a fear of stopping work. There's a big unknown beyond your capacity to earn the regular income. And the financial plan helps provide some certainty around that, or some comfort's probably a better word.
It does. And in fact, you often ask the question, when do you want to retire? There's a better question, which I've learned over 30 years. When do you want to have the option to retire? And often that is a much richer question for people. They go, actually, it would be really nice if I knew I could pull up stumps at this particular age on this particular income. But time and time again, we sit in with clients and they go, actually, since I started thinking about it and since we've started talking about it, I actually want to go and buy another business now or do something a bit more, fun.
Yeah. And, life changes and so things happen, but it's more about what can we do now to build a better future down the track. And you've got some sort of simple approaches to that as part of the road.
Yeah, look, one of the approaches is today money, tomorrow money, and retirement money. It's mainly super, although as they start taxing super, there might be other things that we need to do. But getting the today money right is really critical in my view, and having enough flexibility around that. And we do a risk tolerance for the investment piece, but it's actually about the financial decisions. And in a couple, One could be more conservative and more concerned is probably a better word. And so making sure that the visibility, the transparency and the access to the emergency pot or the today pot is critical. So then there's a compromise to potentially tie up or put away for long-term growth the tomorrow money and the retirement money.
Yeah. And maximising, I guess, that pot of money at the end, there's an investment piece to that, which again we'll talk about a little bit later. But there's also tax implications. There's the decision to pay down debt and this concept of good debt and bad debt.
Yeah. And in that first meeting, we actually have very simple modelling, which says, should I pay down the mortgage if it's bad debt, or should I put it into super? And the maths is part of that equation, but it's also about sleeping at night. It really is, because people are tolerant of a certain level of debt, but if it's too high, then that's way more important than the maths on getting a deduction to contribute to super. So it's about knowing that they're the three pots and prioritising between the thrbe.
Yeah. And when we talk about bad debt, we're talking about debt that's not tax deductible.
Correct. And you want to pay that off first. And a good accountant will be working on that day in, day out for you.
Yeah, and that's where we've got a number of strategies out there to try and make bad debt good debt. And there's a number of tools such as interest offset accounts and other bits and pieces that help with that. But that's the reality, that paying down bad debt leads to a bigger nest egg at the end.
And debt can be good, so the tomorrow pot, depends on your age, but I wouldn't recommend this to a 65-year-old. But if you're in your 40s and 50s and you've got the mortgage under control and super is so far away, then we're talking about that tomorrow pot. And using leverage and in the right structures, and that's part of where you come in, ensuring that there's a lot of flexibility. Because if you want to retire before age 65, for example, or age 60, you need a pot of money to fund that period, and often it might be stored up in an entity where we can draw down on that and not pay a lot of tax. So it is got its own role, that tomorrow pot, which is different from the retirement pot.
And I think the market has changed a lot over, say, the last 5 years. We've come out of an environment where interest rates were historically low, which meant the cost of servicing debt, or the cost of that debt, was low, and there were other opportunities out there to generate more income than simply paying down debt.
We would do the modelling of, should I pay off the mortgage versus putting the money into super, and super won every time because the mortgage wasn't costing anything. But then I would sit there sometimes and put in a cheeky 9% that I used to pay on my mortgage and go, there are moments in time where it's definitely better mathematically to pay down the mortgage.
Yeah. And I think that the basis behind the approach with clients, it is about what helps them sleep at night.
Yeah.
And they don't have to take your advice. Yeah. Your advice might generate the best return for them, but ultimately it's their choice, it's their money, and it's what helps them sleep at night.
I think that's right. Out of that first meeting, many times people have said, thank you, that was a great meeting, I feel better. I don't need your services now, and that's fine, because they know who to come to when they do need our services. But also, it's absolutely true that I can go into meetings with clients that I've had, mutual clients, and you've seen me. I come in with my little wallet and I've got the investment report sitting in there. I never bring it out. Because that bit's looked after. The investment piece is just a piece of the equation. It's more about, are you watching the investments? Question number one. Are you worried about that? And then moving on to, well, what are you going to spend this year, or what are you going to do with your family, or what are you doing, with your day? And that is to the heart of what a good relationship with a planner is that they're sleeping at night and they're just happy to talk about their lives and get on with it and not worry about the money piece.
Yeah, and when we're talking to clients in relation to their business, we'll help them prepare a business plan, which looks at where they see the business now and where they see the business in the next 5 or 10 years, and what does their succession plan look like?
God, it sounds like a financial plan. I do that. We should swap roles occasionally.
But it is. And it's often the focus is just on the business.
Yes.
But often the business is, I guess, the cash cow that allows the opportunities to do these other activities and provide for a retirement. Sorry. The financial plan is such an important piece to that, but it often gets overlooked. Because the focus is on the now.
Yeah. So many times I've looked at people who have sold their business and we start to talk about diversification. They've been completely undiversified for so long, but very focused on the cash flow and very focused on the success and the growth of the business. And so it's got all their attention. What you want from a financial plan is to not have to worry about that, not be so focused on that. Just knowing that the income is landing in the bank account and that the tax is looked after. So that's our main measure is kind of the cash flow landing in the bank account. Whereas back in a business, it's spreadsheets and it is the plan and it is about have we earned more than last year, have our costs gone up?
Yeah. But I guess my point is one isn't more important than the other.
No.
They both are as equal as importance, but it's often the business plan gets more attention than the financial plan.
Yeah. I started early in my career working with accountants because I worked out that accountants had the best relationship with business owners, and business owners that were thinking about selling is a wonderful pot of money for a financial planning business. And often it's the first time that a business owner is actually thinking about, well, what was this for? Because if they're heading into the potential succession or sale of a business, they are for the first time actually saying, why did I do? What impact can I have? And often it's a potentially philanthropic conversation. It might be a legacy question about family. Business owners are really wonderful clients to have because they have been so focused and so intelligent about their business plan. When you apply the same sort of thought process to a family and wealth plan, it can lead to really interesting conversations.
Yeah. So for those people listening to this podcast, what should they be doing right now in relation to starting to think about a financial plan for those that don't already have one?
Well, I think the first question is there anything that in that list that we came up with earlier that you are worried about? Is there any part of that bit, the insurance piece? I made an alarming statement. You need a couple of $1 million of insurance. Have a think about that and take a step. Contact accounting professionals and do our little short 5-minute health check and get the feedback straight away to yourself of areas where you could potentially improve.
And you're never too young to make a start in relation
Oh
to these
no, I early in my career I considered the very first day of employment and being a planner for that moment where you're picking super funds and picking mortgages and that sort of stuff. I ended up working out that wealthy business owners was more lucrative, and I've enjoyed that part of it. But no, there are really important decisions as you start a career, really important financial decisions. Yeah. Savings habits are a really big part of it.
Yeah, and just the financial education.
Financial education. It's not in our schools. It's not in our schools, and it should be.
All right, well, thanks for joining us for part 1 of our 2-part series with Tony. Next time we catch up with Tony, we'll have a deeper discussion in relation to the investment side of the financial
and I love investments, as you know, so we'll have fun with that too. Thanks, Mark.
All right, thanks, Tony.
Thank you.
Well, that wraps up episode 2 of the Beyond the Balance Sheet podcast. A big thanks to Zac Jenkins at Accounting Professionals, along with Tony Bates from One Wealth, and we'll catch up with Tony Bates for part 2 of our conversation next time.